Hello guys. Thank you for being a member at myfinancesteacher.org. I just want to have a quick update here, nothing really fancy. I'm gonna jump through a number of markets. So gold over here looks fine. The ongoing short-term daily cycle is on day 21. I would expect these cycles last for at least maybe a month. So probably at least 1 week or maybe even several weeks until I'll be ready to jump into a large position in gold. Gold over the next couple of years, as I've mentioned in a lot of my previous videos, is going to do really well. Looking at gold optics, at the moment it's at 60, but I think maybe it's not really reflecting what's happening to gold at the moment. Today we see a relatively considerable red candle on gold, so maybe this optics by the end of today, by tomorrow, will actually move somewhere closer to 55, and maybe over the next 1, 2, 3 weeks, if it dips below 50, that might actually be close enough for the end of the ongoing intermediate cycle. Next, the general stock market. This is S&P 500. This one is a little bit tricky, as you see from my charting over here. I was actually expecting S&P 500 to already start moving down into this short-term daily cycle low over the last few days, but well, as you see, S&P just keeps chugging upwards and upwards and upwards. Well, I guess all that money printing, all that Fed liquidity is going into the general stock market. Well, at least the 14-day RSI is already into overbought. It's at above 80. So we might see some correction maybe over the next 1 or 2 weeks, but maybe central bank wins and things just break down. It's already 65 days long, this short-term daily cycle. They usually last between 1.5 to 2 months. So we are now just over 2 months long, which is not really extremely unusual. So if the general stock market comes down over the next several days, maybe 1 or 2 weeks, that would be a bit of a long or short-term daily cycle, but it wouldn't be something miraculous. But still, it's unexpectedly strong. At least I didn't expect that. And looking at the optics for the S&P 500, we see that optics is pretty high. We're above red line. Maybe the Fed liquidity is going to push general stock markets even higher from here. But do I want to buy right now? I don't really want to buy. Optics is pretty high. I want to buy when optimism levels are a little bit lower. I'm more of a contrarian trader. Okay, moving on to Bitcoin. Bitcoin is doing very well. The red candle right now is actually giving us a little bit more certainty that the 2-month cycle in Bitcoin is still ongoing. Rather than finishing on the 25th of August with a 59 days long cycle, looks like we're now on day 67 on the ongoing Bitcoin cycle. These usually last for 64 days on average over the last few years. So if Bitcoin over the next few days pokes again through the lower range of the Bollinger Bands, maybe even breaks below the 50-day moving average, that would be a nice end to the Bitcoin cycle, because so far the decline has only been pretty mild. And looking at the 14-day RSI, it's already below the recent low. It's at 47.3, whereas the recent low was 48.4. So it's already actually looking better for a cycle low at the moment than it did a few days ago. Yes, we do have a small allocation to Bitcoin in our fictitious portfolio at My Finance Teacher, but that's why we do keep a lot of cash with that portfolio as well. Bitcoin optics, I think again it's not reflecting the big red candle at the moment. Looks like Bitcoin optimism index is above 69, but with a currently ongoing big red candle, that might actually drop maybe down to 50 by tomorrow. So we'll have to see about that. This chart doesn't really tell me that much at the moment. Ethereum, it's also dropping a lot, of course, but it's still in the upper half of the Bollinger Bands. It still looks fine, not as bad as Bitcoin. Bitcoin is nearly broken below the recent low since the late August, whereas Ethereum is still far above that recent low from late August. So it's more likely that Ethereum is still in this new cycle, which is already 8 days old. With such a young cycle, I think there's still very nice potential for Ethereum to push higher over the next few weeks. Although, as I mentioned in this recent video on cryptos, I did expect Ethereum to dip down into the Bollinger Bands again. XLU, well, XLU hasn't actually been doing that much since we've started entering into XLU positions. And as I mentioned, the S&P 500, the blue line over here, just keeps going higher and higher and higher. Maybe over the next few days, over the next 1 or 2 weeks, if S&P corrects a little bit, XLU might actually bump up, and that would be our place to exit from this trade. But again, the general stock market just keeps pushing higher, and it's hard to say what's going to happen with so much strength possibly coming from the support of the central bank and its liquidity. Even though general stock market is going higher, it's actually nice to see crude oil doing a little bit badly over the last few days. Today it's down by over 1% or so, even though over the last several weeks you see that crude oil is generally just going horizontally. The crude oil cycle, the intermediate cycle, is on day 135 right now. Usually these last for around 5 to 6 months, nearly half a year. So I am expecting some nice trading opportunity in the energy maybe over the next several weeks. So I've been actually looking forward for that for quite a while. Looking at the optics for crude oil, it's at 45, and of course with the price almost horizontal over the last few weeks, optics has also just been kind of fluctuating between 43 and 53, something like that. But if you look at history, usually last year nice buying opportunities came at around 30 or so on the optimism level for crude oil. And further back into history in 2018, there were times when modestly nice buying opportunities came when the optimism index was somewhere around 45 as it is right now. But still, I think a nicer buying opportunity in crude oil is coming up probably over the next several weeks.